Okay, Doc here from North America. Good morning, good afternoon, and good evening. It is another fun-filled day. Hey, there's George. Hey, George. Silver breakout to the upside. Breakout of, I mean, the high. We'll take a look at it. Let's just take a look at it right from the beginning. Let me get rid of this ad that wants to tell me about burgers. Good, I like burgers. Okay, there we are. All right, so let's take a peek at that. What is that third thing there? Something doesn't look right. What is that? Trying to figure out what that bar is right there. Oh, I guess like that? Maybe like that. I'm not sure what that's all about. Let's see what that is. Huh. Interesting. If I move that over, it disappears altogether, doesn't it? Look at that. Alright, let's get that thing over more. And there we are. It's getting shrinkier. That's good. Let's go check out silver. Let's put it up on J4X. And we'll notice the, what is it? It's trying to turn up right here. You can see that on the dollar index. But let's go over to silver. Silverado. Silver. Right. Where is it at? Right there. There it is. Silver. Trading at $23.46. Well, it's definitely higher. It hasn't broken that 25.5. To me, that's the biggie. Let's go take a look at it here. It is marching up. I guess, we talk about it here. I'm a little confused. Deutsche Bank, we know Deutsche Bank is in the group with Citibank and Lloyd's of London. We already know that stuff. It's amazing. I'm hearing people this morning on the different networks go, we didn't realize Deutsche Bank is having as much problems. It's like, duh. No one will buy the thing for like the last 15 years. No one will buy it. I mean, they've tried to merge that bank with different banks for a while now. They can't. No one's willing to take on that risk. But anyway, there's silver, and you can see that is a good day. It's almost as good as it was 2 days back. The candle there on the 22nd was a high of 23.24 with a low of 22.44. So it's like 80 cents. And let's see what we got today. 80 cents from the low to the high. Almost. We're getting there. It's, 68 cents at the moment. We got 12 more cents maybe to get it going, huh? That'd be cool. Yeah, that's, what else can you say about it all? I guess, will it get up to the 20? There, to me, would be the breakout would be here. This 24 area. And even then, we talked about, trying to get through the 25. To me, this is not a breakout. This is just panic. I'm going to call it panic. Yeah, I like that. I like that word, panic. It's more of a panic buy going on. Or it's not even, panic is not the right word. I think it's just a flight to safety. Metals are a flight to safety. That's what it comes down to. At least they can see it, they can touch it, they know what it is. Same thing now. Look at gold. Gold is not challenging any one of these. Look at that range. It was on that. That's not being. So silver is playing I get it. Silver is playing catch up. That's what it is. Not like the stuff you put on French fries. It's trying to catch up to where it belongs, probably. So, George, do you follow the spread between gold and silver, the ratio? Do you know where it's at right now? That could be that's probably the answer to it all. Is it a mathematical mean in the center, or gold is over 2,000 now. Yeah, but I mean it's barely moving compared to silver. So I'd have to assume that silver is trying to catch up. It's trying to. Now I would say that there's no doubt. Ever since quantitative easing, all these statistics really are hard to pay attention to anymore. At least for me in my head. Take a sip of the tea. 5 minutes in, I see. Okay, that's not too bad. Yeah, so, George, I think that's probably what they're trying to do is they're probably trying to catch up. I mean, look at the break. Here's the breakout. They took out that, on gold, they took out the 1940, was that 46, 47 area, and now we're trading in the 2000s. That to me is a breakout. But I would say best way to describe silver is it's trying to get back to where it belongs. That's what I really see. Is, I mean, you could use this. I guess you could use this as a breakout right here, something like that. I guess that the finger and so forth going on, and I would say that to me, I have so much doubt of with quantitative easing and the way they can print money and they can short this market. You know what it really comes down to? The lack of delivery. That's what it really comes down to. The lack of delivery. That's a real big thing with us derivative traders. If you can't deliver it, you can't trade it. In other words, you don't want to be involved in something that can't be delivered. And no doubt this is paper silver and paper gold. They have. I think we talked about it last week. The problem at the exchanges and the amount of what's sitting in the vault. Yeah, look at the ratio. Give us the moment you find something. What the historic? I think the historical is like 120, isn't it? 119. And I wonder, I can put the calculator to it now. You divide $23.57 into wherever gold is at the moment. Let's find gold. Gold is basically 2,000, right? So you're looking at 2,000 divided by 23. We'll say 60. Let's round it out, And that ratio is, what is that, 85 basically. And I want to say that I think the low end of the ratio has been in the 60s or 70s, and the high end of the ratio has gotten into the 110, 115 maybe, 18, 20, right around there, I think, historically. But a lot of the distortion, the things that make it look odd and doesn't make a lot of sense, is ever since quantitative easing, the ratio's gone off track, But I would say that's what I'm seeing. I'm seeing there is that they're just, someone's probably saying, let's sell some of this stock and let's buy some silver, and they're probably saying, yeah, but the ratio is this, and they're going like, yeah, well, the ratio used to be that, it could be, I think I remember it in this, I want to say like 68 or 72. I think the ratio got down to that low, and it's gotten really ridiculous at times where it breaks across the 100 mark now. They really beat metals up, silver in particular. But one thing is for sure, and that is that it seems to be putting better bases in. Let's take a look at, let's go over to J4X and just, see, like, there's silver. And when I squeeze this, what is that? Address book. What is that? Okay, there we go. Whoop. Now, how did that happen? What the heck? There we go. And so, when you look at the metal itself, you would think that it would be, I don't know, $39, $40, something like that. I mean, all-time highs are in the 50s. So, I mean, gold is only, what, 10%, 12%, 15%? I guess about 14% off its all-time highs. But, for silver, it's like 60% off its all-time highs. So, this thing's got to do some catching up. It's got to lift. It should lift. In other words, it's not a surprise to me. I said to Robin, yeah, let's go see maybe it'll see the 25s again. I said that to him, I guess, about a week ago. Maybe it'll see the 25s again. In a sane world, in a rational world, we should be really saying, will it be touching the $50 area again next week? Instead it's we're hoping that it even sees 50% below it which is totally absurd. I mean, it's just insane. I can't and I hate to wear people out on the webinar. You know how I go into my old attitude of, if you had told me in 2006 or 2007 before quantitative easing, and even halfway through or mostly through 2008, if you had told me what 2008 at the end of the year would look like in 2009, where do I think gold would be? Where would I think silver would be? I would have said, I don't know, $5,000, $10,000 for gold. Somewhere in that range. Maybe a week gold of 3,700. And now the all-time high is in the 22s. And then you go over to let's see, where is it at? Right here. That's silver. Let's put it all the way up on the screen and go look at. Let's move this down. We don't need that right now. And let's look at a monthly on that thing. And it goes all the way back to, where do we go back to? 2004, right? I mean, this is 2008. This is, in other words, they ran up to all-time highs basically, but the fact that it comes back down to 15 is like, who in their right mind was selling it? Honestly. Matter of fact, the thing looks like an A, B, and a C. I mean, is it really going to go after $7 an ounce again? It's hard to believe. None of it makes any sense. I mean, that's really weird. Banks are, we have banks having issues. We have governments out of control financially. We have the second largest economy in the world, the European Union, having banking problems. No wonder the Chinese don't want to float their currency, and they want to hoodwink everybody to be pretend that they're the second largest economy in the world. They couldn't handle that in 2 days. I was laughing to myself a couple days ago. As a matter of fact, yesterday even I was laughing at it when we had the conversation about bricks. But I was like, I was walking out to the greenhouse or doing something on the farm here, and I was thinking, what an absurdity if the Chinese won the idea, let's say they started trading, they convinced the Saudis, which they're not going to convince the Saudis to do. But imagine if the Saudis said, okay, yes, we're going to trade oil now, not in dollars. We're going to use the benchmark as the Chinese yuan. You know how many people would be coming in and exercising that thing? Oil goes to like, $90 or $100 a barrel, and the yuan would be, next thing you know, the yuan would be like 27 or 30. I mean, it wouldn't go down to like 3 or 4. It'd go the other way. There's no way they could exercise it. I mean, it would be insane. It would be totally insane. So, exercising, it's funny, I started off the conversation about that, is that if you can't exercise something, then it's not really real. It's not really a tradable product. I mean, it can be a converting factor, like, you want to invest in China, you go to the government, they sell you currency. Done. And do people on the open market really get that involved? I've heard there's I understand there's like a black market off Chinese yuan outside of China, and I understand it trades much higher, way higher. And but I don't really see it talked about or seen much anymore. But a couple of years ago I heard about it. But if you can't exercise it, then it's really hard to identify the true value of something. So in this case here, that's what the problem is with the metals. You can't exercise those future contracts and take delivery tomorrow morning. They don't do that. And that's why we see this distortion. Let's put that distortion back up on the screen too. I'm going to show you a distortion in the back months. Let's see, is that right? Or did I just start something? No, that's it. I guess I must have closed it. All right, so let's go like this, and then let's go over here, and let's put this up on the trading screen itself. And this is the back month of gold, and we'll take a look at the back month of silver, and see what it really looks like at the moment. Let's go to the exchange. One of the exchange charts directly to the thing there. Might be a little delayed, but that's no major thing there. Okay, so now we go like this, Here is back month gold. So let's bring this over on the screen there. And let's do this, get rid of that. There we are. And so here we are. Here is April gold trading at basically $2,000 right there. Okay. That's April of 23, next month. Then you look at April of 24 right there, and it's trading $92 higher. Then you look at it at that 25, and you can see it's trading at, basically that's the June contract, and it's trading at $2,177. And then when you look at the December contract, it's trading at close to all-time highs in that same year, just a year and a half from now, I guess it is. A year and 9 months. And so, let's see, look at that. December of 28 and December of 27, it's almost at $2,300. That's a strange distortion when you go and look at silver in the same situation. Silver starts to flatten out in the back months. Let's see, let's find it. There's silver. And then, so we're looking at, I think we're looking at May silver, right? $23.50, basically, 57, all right? So then we go look at May in 24, and it shows some life in it. It's almost 50 cents higher. That's pretty good, okay? So we're actually seeing now, for it to be the same as gold, that's about right. Is it 10%? 10%? No, it's a little bit stronger, isn't it? So 10% would be a 10%, it would be $24. Let's see, at $23 and was it 23 right there, 57, right? So 10% is $1. All right, so 10%. I mean, I'm sorry, it's $2 and 30 cents, 2.30. Okay, so now we look at the May of, and that's trade. Oop, didn't mean to do that. Let's go back to that again. And you look at the May right there. It's trading about 50 cents higher, right? Is that right? It's close to it. 60 cents higher. So 60 cents higher is under what is that? 5%, 6%, something like that. It's like 6%. And then not 10%. And then you go back out another year, into 25. And you see that it's doing the same thing basically in that area. You see it right there. They're showing a July contract at $24.90. So not like gold. Gold is a good 10% as you go out further and further. Now there's 27. It's $2 higher, $3 higher almost, $2.50 higher right there at $26. But that's not all-time high. But gold is touching almost all-time high in the back months. So, I don't know. To me, something's wrong out of that whole... it's obviously a distortion. It's a true distortion. It doesn't make any sense to me. In other words, it does make sense. What it says to me is it's being manipulated. It's very clean and clear. There's no doubt about it. It's being manipulated, and there's no other way of looking at it but that. It is purely manipulated, and... Notice the highs seem to get lower. That's the problem. I really hate that. We were really looking for that last weekly buy for it to go up to the 25.5 area, and it died at like 24.80 or something like that, and we went back down to 20. It was like, what? It's like, matter of fact, it's like as if they're, it's like the arbitrage. If you're if they have to be long gold, they'll sell the hell out of silver, and that's what they're doing. It's a real disappointment because it's not really reflective of the inflation and the calamity in the banking system and the calamity in the governments right now. Not counting, there's war in the center of Europe right now. Who would have thunk, huh? So anyhow, to me, I see. So to me, what I see is. Quantitative easing and paper money seems to be the recipe of the era now, literally the era, and in this we have too many professionals investing like it's pre 1975. In other words, they're not using the derivatives correctly. They're doing swaps. That's the only reason why Deutsche Bank even exists to this day, is they got so many swaps on. They're the biggest swap holder that, they have something like 30 some odd trillion. They had 73 trillion in swaps when they got in trouble. That's why the stock trades, 85, 90% off of its all-time high. So, anyway, I guess that's me and my lecture of the day of delivery and not delivery. That's what it comes down to. DiGiorno. All right, let's go back to the currencies, and if you want to see anything else, just let us know, George. All right, let's go to the euro. Oh, well, you know what? Let's dissect the dollar index a little bit more. I just want to refresh my brain on what's going on with the dollar index. There it is, right there. You see, I guess this is the monthly, so let's go into the daily. And there's a little strength trying to kick out here, with interest rates and so forth, and so a little flight to dollar, I guess you could say. Now over here, we're still kind of stuck in that weekly buy. Let's see, right there. There we go. And you can see here, it's trying to get into the daily buy. It looks like it wants to do it. It's got a green and a red. But the weekly, is that right? Are we right there? What's up with that? That's March. Oh, that's June. Okay. Let's fix that. The weekly is put June in there. Okay, that makes more sense now. The fact we're finally starting to see it dip down and below. For 2 weeks, the fast one's been below it. And now we have the slow one moving below it too, the algorithm on the weekly. So we'll have to add more data to the back there, but that's accurate. I can tell you that is accurate. And so that makes more sense to me. Now this is the dollar index. And when we go over and look at it on J4X on a weekly basis, I'm sure we got a couple reds. It has to be at least 2 weeks of red, I'm sure. Yeah, 2 weeks of red right there. Hey, Janos, you want to see SPOOs? Let's see what the SPOOs are doing. Oh, they're back up to 39.49 with a low now of what, where is that at? 37. And let's go take a look at the daily on that. I was saying to Robin, you just don't want to be long this thing until we get into a weekly buy again. Right there, there's the... It tried to get up there. We were very close, but it still couldn't even get the fast algo through the zero line. We've been in that sell for 3 days now, and I guess you could say Europe is feeling it more than we yes, Europe is feeling it more this morning than we are. The Dow is down more than the other indices. To join the longs, join the shorts, join the shorts. I would do it through binaries and options. I think that there's pressure. Probably the best game of all would be sell call spreads way up higher, and that would be the way to be short, because I'm not totally convinced. I think we're going through that classic as usual. The world is having a problem, and they're going to go buy American products. That's the weirdest thing, but it's the way it goes, Hey, I understand that the Slovakians are turning over their their MiG-29s, and America's giving them attack helicopters with sidewinders. So, I mean, we're in very volatile times. I'm amazed everything is as smooth as it is. It just shows you how weak financially the adversaries that we deal with are. I can't think of anything American that I can buy that is a physical product. Wow. Can you do options? Can you do options in on American products like S&Ps and stuff like that? There's an American bacon at the shop, but it's made in Estonia. Wee wee. That's the way my pigs used to make the sound. Ah, okay. Yeah, I hear you. Well, at this point in time, I don't know. These are weird times. I don't know. I think it's so much easier to just look at charts right now and talk about charts because things are so weird out there. Ah, what do you think of swap market? Five Ford cards, Ford cars. Okay. What do you think of the swap market? Don't you think it's kind of like an anachronism? In other words, don't you think it's old fashioned? There shouldn't be a swap market when it comes to these major banks anymore. Shouldn't they just be buying option positions for people? Yeah. Oh, Ford stock. Let's take a look at that. I think it's in a daily sell and a weekly sell at the moment. Let's see. Let's put it up there. Here is Ford stock right there. Yeah, it's in a daily sell for 3 days. No, longer than that. It's been in a sell back here. Went into the sell, couldn't get into the buy because of the green and the red. Then it went back down again, and it's been going down. It's pretty much where it started from, and we're in that weekly sell since here, up in the 12s, and let's see. Let's go stretch it out a little bit like so. Just seems to be back down to the low end of the range, doesn't it? There's the beginning of the year. So it's just a little bit down for the year. There is January 1st, right? So there's December. It's settled at 1163. It's trading at 1130 as we speak. Yeah, it's kind that was a nice run here. Got into the buy and it took off and it was a good run up into the 14s. And then now it did the February top. We always talk about that February top type thing. In this case here, seems to be at the very beginning of February. So, yeah, that's where we're at the moment with that. Yeah, if Mr. Putin bombs a few more cities, maybe you could get more good sales in cars. People need to buy cars after they get bombed. 10-year yield in the States is 3.32. That's something. Okay. So, let's see. Where do we go from here? Let's go over to the euro. Look at the euro this morning. Having a little issue. Nothing major, but it knocked itself. It's right on the edge of a weekly buy again. It's trying. And it's playing with the daily sell as we speak. I'd imagine they'll add the liquidity that's necessary to keep everybody stable. I don't think there's. It doesn't matter who has a problem. They're going to make things stable. Let's put it this way: if they could keep the world at minus interest rates for almost a decade, then they can easily keep the world stable. I mean, the what's the word I'm looking for? It's a word that describes insanity with action. The hypocrisy. The hypocrisy. In other words, the bravery to do the stupidest thing in finance, and that is taking money from investors and not give them a return, but actually charge them interest at the same time. That the level of hypocrisy of that happening is insane. So Why not? They'll prop up whatever they need to prop up. Last night we saw the balance sheet for the week with the Federal Reserve. It picked up $400 billion. So they had topped out in the nines, and they got down to 8.5 trillion. I'm sorry, $1 trillion, and they had gotten up a little bit over 9 trillion. And we thought, okay, so they took off. They covered a half a trillion worth of liquid cash, out there. And then now they're up to 8.9 trillion again. They're almost back to 9. So, like I said, the level of hypocrisy is insane. So, it does make it really hard to use. Just like when you made all those webinars about fundamentals, it really takes it hard to even seriously have conversation about fundamentals anymore. It seems just like once it looks like it's starting to come back, it's like, yay, fundamentals are coming back into the picture again. And then the next thing you know, off they go. Fundamentals are thrown out the door. Okay, so there's the euro. You can see that pressure on the euro. And let's see what the cable's doing. Oh, let's put euro up on the J4X too. Let's see, euro. There we are. That's the weekly, and so it's trying to lift. It's been battling it just like we've been seeing over here. And as you can see right there, the fast has been through it just like J4X is through it. So they're pushing. They're trying to get the slow to get through. That'll give a good firm confirmation that we got some type of buying going on, I actually liked how the CPI and the GDP impacted everything during the recent month. Yeah, me too. That's I think, didn't I say a webinar or two, like fundamentals are coming back? I did a webinar like that. Yeah, I was excited too. I was like, oh good, the grown-ups are back. Mommy and daddy's home. We can't do this anymore. It means the two courses I took in 2011 and 2015 weren't such nonsense. Well, at least you understand what they are. In some way, fundamentals have some realistic value. It's just that they're not really following things well. That's all. I think the S&P might be higher. Let's take a look at the S&P again. Let's look at the intraday in S&P. Yeah, it got up into it got to 60. Last we looked, it's trading at 52 now, but it traded up to 60 there. Still playing with that volume. I am. See, the volume gets through here, and we're in a buy, and it's definitely a good solid thing. I was bidding on. Oh, did I get calls? I was bidding on calls. Let me just double check. I think I got calls. Okay. Yes, I did. So I bought calls back in the 40ish, 44 area. So they're doing all right. Yeah, that's I might binary them sooner or later today. I would think that there's going to be some strength. I think that money's going to run here in the first hour this morning, just because that's the nature of our markets, the way the global markets work. All right, now let's take a look at that S&P again, and we'll go to cable. Right there, 53. Cool. It's getting up there. All right, now let's take a look at cable. There's cable. And let's put cable up over here. And it's trying. Look at the manifold. When's the last time I seen the manifold? It's almost touching each other. Let's widen that out. That manifold is like, wow. Talk about an explosion coming soon. Look at that manifold. It's like, wow. When's the last time we seen the manifold like that? I see some tight manifolds, but ooh, that one right there was pretty close. They gave a couple of days up, and then It went from 115 to drop 20 handles in 2 weeks. Something's brewing. Time to put a straddle on. For those option traders out there, it's time to put a Ooh, there we go. There's one there too. It was trading at where was that? Trading at 122 and a half, basically. Let's call it 120. It's 122.65, and within 3 weeks, it got down to it was only 4 handles. That's not a big move. Huh. I think it's well worth putting a straddle on either way. Make it a tight straddle. So in other words, don't I guess you could, if you can, something cheap with the wings, look 6 handles down type of thing in either direction. And obviously, if we're in the weekly buy, you have to almost think more on the long side. And we are in the weekly buy, so this thing might try to just take off on the upside. I keep on thinking that they want to sell the dollar and buy the pairs. I always start off my webinars around here talking about that too. So maybe this is the sign right there. That tightness is incredible. Let's see. All right, from there we slide over to, there's J4X. You can see it's trying to lift up. And that's the weekly. Let's take a look at the daily. And pressing down a little bit, we got a little red going on just like here. There's some red there. Those two red dots 2 days in a row. The green dot cooled it, but it's just saying something's coming. Maybe it'll take it down a little bit more, and then remember that they like to take them down to take them up, and they like to take them up, or they push them up so they can take them down. That's what it comes down to in the end. All right, from there we zip-de-doo-dah over to the Swiss. Let's see what the Swiss is up to this morning. There's the Swiss, still looking a little firmer against the dollar. Not enough that it make me happy. I'd like to see the dollar weaker. And let's put it up over here. Yeah, see it's going in the other direction at the moment. It's trying to lift back up. And it's still hanging in there on the sell side there with the weekly, so that's cool. That could be a sign that the dollar is going to get sold. This is going to find a way into. I mean, look at the herk and jerk it did here. In, out, in, then in, out, in reverse. And maybe, after it left that, it took off. Maybe after we get into a weekly sell here, it's going to take down, go down. So the play at this point on the Swiss really does look like, watching it fall. Maybe it'll go to the 87 area or 88 area. Then from there, we'll take a look at yen. Oh yeah, look at yen. We keep on fantasizing. Weekly sell 125. We're right on the edge. Right on the edge with the yen. There it is. So there's the action in the yen, which is interesting. They're buying yen and selling dollars. They're playing all kinds of bloopers about our vice president. She's a weird one too. All right, from there we zip over to the Turkish lira. I saw it go into a daily sell yesterday. I was like a little surprised with that. It just missed it. Okay, so they propped it up at the end. So today it's pushing into the sell. I guess more money's coming in somewhere. And you can see the weekly, though, is trying to get into the buy. I mean, at this point in time, it was so much easier to watch the Turkish lira go from 2 and 3 to 20. It doesn't make a lot of sense now that it's parked up in the 20s. I don't have. It doesn't feel right. The liquidity. It's become so much. We watched it go an enormous We watched an enormous crash in the Turkish lira against the dollar and the euro, but it was liquid. It was a liquid trade going on. There was definite liquidity. Now you see these strange, out of the range trades, and then they bring it back to the zero line. So I don't really, it's like the way Janos said it about the fundamentals. A lot of nonsense here. That's what it comes down to. All right, from there, where do we go from there? We go to the Canadian, and there's the CAD. And the CAD is it's rising, so I'd assume oil is going down. Let's just take a look at oil. Yep, that's going down there today. That's right. I remember seeing that now. Playing around with the daily sell. Over here, let's see what Brent's doing. With oil going down. And let's put Canadian on here for a second. And Canadian going up. That makes sense. And then let's take a look at Brent for the oil over here. Right there. And it's trying to be pressed down again too. So I saw a statement put out because they were really slamming all the oil sector this morning. And there was talk like, well, the world economy is going to start to slow. And so, there's less of a chance to see strength in the industrial side of things. And then, let me see, where we go from there. Let's go over to the South African Rand. Now that should be moving up. I would expect to see that moving up. I'm sorry, going down, because gold's going up. That's it. So it's going down. That makes sense. In other words, it's gaining value. That's what it's doing. That's what I meant by going up. And you can see here, when it goes down, it's gaining against the dollar. This is a dollar South African Rand, not South African Rand dollar pairs trade. And so we go over here, and we look at the South African Rand there. We'll throw gold in there like that, and then go back to that. There we are. There it is right there. Now that is lifting up. That's I would expect that to be going down. So where do we have gold at? Gold is trying to lift up. It's doing its best. Not as good as silver, of course. Let's see, silver really is making a nice dash up into the 23s, trying to go after 24. That's really nice. I don't have any real faith in the metals complex. Buy the coins. That's the way I look at it. Buy the coins. Buy the bars. Buy the coins. Now, from there, we'll go over and look at the Mexican peso. There it is. Peso's having its issues. They look like they were trying to do something. It must be like profit taking right there from this move. Let's put it up over here on J4X. Right there. Look at this. It's bottoming out on J4X and trying to lift up again. And we're seeing the same thing over here on Chicago Quant. We're getting through the buy number. It's a clean green dot. And we are, without a doubt, a second full week in a buy. And the fast has been in a buy for 3 weeks. So that's it's not a good thing for, I guess the peso's losing some value against the dollar again. Ever since that BRIC announcement by the president. Boy, talk about tying yourself to a sinking ship. I mean, I would love to see a competing currency. That's what we have the euro for. It's a competing currency. That's why there's no Deutschmark anymore. No French franc. Wow, what's up with the French? Going from the age of 62 to 64 and they're burning the city down? What's up with that? Paris they had to bring in, 12,000 troops? They're going crazy in front of the Eiffel Tower and everywhere else, getting nuts. Jeez. Please, people, chill. You gotta chill. All right, from there, that pretty much does it on the currencies. If anybody wants to see a currency, let us know, and we'll go look at it again. It's no problem at all. From there, we're going to go take a look at the metals complex. We'll finish that. Oh, there's the S&Ps again. They've really kind of chilled out in the... They ran up to 60, stalled, and just hanging around in the low 50s now. And we're still in the buy here. So that's pretty cool. Right there. And I guess if this thing gets going again, you can see it's been hugging. The volume's been hugging that zero line. And now we're starting to get more dominant blue versus red. So if this thing goes into a buy and this line moves up, they'll take off. And if it doesn't, it's right now it's been in a sell from right here and it's not really going anywhere. Now let's go take a look at silver. And then we'll look at copper. And there's the silver trading at 56, 23.56 with a high today now of 23.70 even, or 70.5. So, Doc, can you take a look at DAX? Sure. Hey, 47, how you doing today? DAX. Let's see where we'll put it. We'll put it right in there. Yeah, Europe's having a little issues, aren't they? With it's like I don't know if you were here 47 earlier, but I'm really surprised where people are surprised about Deutsche Bank. I mean, how many times a week do I mention Deutsche Bank with Citibank and Lloyd's of London and Merrill Lynch? I mention those things like every week here. I mean, it's a warning sign. Yeah, you can see here that's the ETF. Let's put up the see if I can get a better chart for you. Let's see. Let's go to there we go. I think I got something better. Let's see. Let's move this over, and then let's go markets. Where is world market? All right, we'll go with pre-market. Pre-market will show us. And there is the Nikkei and so forth. There's the DAX. Let's see if we can get this up there. There we go. Down 319. Just down 2%. Let's make it let's make it a bar chart. If I can find it. Let's go like this too. Month. And let's get rid of that. Kramer. Oh my God, the guy can't. He is a problem with himself. Let's see, what kind of chart is this? Where's this? I thought we could change the style of the chart. Not there. Well, it's a line chart. You can see it came down from yesterday from 15,365 down to 14,892. So there's pressure there. That's for sure. What else can we say about that? Interesting. It's got the finger thing going on. But what'll probably happen is that they'll probably they'll probably put a bottom in here once the ECB figures out what they're doing. J.A., how you doing? That's what I was thinking, 47. They'll probably put some type of, they'll come up with something. Yeah, Deutsche Bank is already gone. It's down, I mean, take a look at the all-time high in Deutsche Bank. Let's see if we can find that. Let's put that up there. The all-time high in Deutsche Bank is like, I think it's like in the 70s or 80s or something like that. Let me see if we can find it. And Deutsche Bank. There it is.
Allowance
DET.
Pro tip. Tell your parents to save money on wireless and give you a raise.
DB.
Switch to Xfinity Mobile,
Wonder
the
what
fastest
DB
mobile
is.
service, and get the best price for 2 lines of unlimited. Just
There it is right there. Okay. Here's Deutsche Bank. And then let's put candlesticks in there. It makes it more obvious. And let's go 5 years out, or maximum even. Yeah, see, there it is, 2008, right? The stock's trading at 100 and almost 150, is it? What's the high there? 152.66, 16. And it crashes down in 2008 to 2009 down to this area here, right? Where is it at? Down into the low 20s. Maybe a little bit lower, right? Touch the teens. They try to play it back up. They realize it's not going to help it any. And it's been here since, for, I don't know, what is this? This is 2023. So, I mean, let's move that over. And we've been down, this is bankruptcy area. I mean, they went down to $5 there. I mean, this is just, I mean, it's 90 some odd percent. What's it, 95% off its all-time highs? It's the same way as with Citibank. So we can show you Citibank. Citibank in the United States is the same situation. If I can figure out how to get there now. Where do I put the stock in? Where do I change the stock? Cancel. We'll find a way to get something in there. Let's move this off the screen for a second. Let's see. So yeah, I mean, we all know the story. I don't understand why anybody's surprised. Wish something, Doc. Banks falling, so not government, but banks. Yeah, I think they'll straighten it out. What they'll do is they'll come in, and they will. What's the way to describe it? What they'll do is they'll prop them up. That's what they'll do. Just like what they did for Citibank. Here's Citigroup. Okay, here we go. Same situation. You see the all-time high is $667 up in here. Oh, it must be further back. Oh yeah, there it is, right there. So that's the all-time high is in the sixes. I don't think it's 566, is it? So maybe it is. All right, so it's 600. Basically, it's like $600, and now it trades at $50 a share or something like that. $45 a share. I mean, that's bankruptcy as far as I'm concerned. $42 a share. And so that's that reverse split. So really, in essence, it's $4 a share. Same thing. These are no surprises. I don't know why the financial media acts like this is unique. Like, oh my goodness, this is happening. It's like it's happening all the time in our face. You got to be blind not to see it, All right, from there, what do we got? Got a few minutes. So let's do this. Let's go to. I just want to look at Deutsche Bank one more time, just to see where the weekly is. Yeah, the weekly's been in a weekly sell since. Where is it? Back in there. It jumped into the buy again there, I guess. Okay, so it went into the weekly sell right there, that point right there. So it was in the 28 area. And it's going down to 27 and change. This is an ETF. And now you can see this morning it's right there at 28. Not the worst thing. Let's see if they take out the 27s. Let's see what kind of market they're reflecting it as. I can get a bid and offer. Let's see what the bid and offer looks like. Let's see. DAX, right? DAX. Their bid 25.67. Last trade is 28. And they're showing an offer of 30.88. $5 wide. No one seems to want to trade it at the moment. They'll straighten that out. Once they find out what ECB is doing, they'll be happy again. They seem to recover slowly. Lack of liquidity, lot of leverage, and value of government debt puts them down. Well, they got those swaps. They've been working their way through the swaps. They had over almost 75 trillion in swaps on. And so no one was willing to buy them. They tried to merge them with Commercial Bank of Germany for years. The Commercial Bank just looked at them like they were crazy. It's like, yeah, right, we're going to take on the responsibility of all that. You imagine if you unwind something that's $75 trillion, you might lose $2 trillion accidentally. They have to let them expire. So they're going to keep this bank alive until the day that the swaps expire. That's what they're going to do. And then when it gets down to about $1 trillion, they'll probably unwind it or sell it to somebody. But, or $3 trillion. But they've watched that thing come from 75 trillion down to like 33 or 35 trillion now in swaps. They're just expiring slowly over the last 15 years, since 2008. So, what is this, 2023? 15 years it took to unwind, let half of the swaps expire. So you probably won't see a sale for, I don't know, somewhere's out there in the next 5 to 10 years, you would think? Something like that. Anyway, that's pretty much where they stand there. All right, now let's go over to, let's take a quick run at everybody else. Look at that, they're lifting this S&P 500 up again. We're through the volume side. Lots of green, blue, and we're in our buy right here. And the longer term one is up also. And we'll see what they do there, but don't be surprised if they open down and then they start to take them up because they start to realize that there's no collapse going on. That's why I was bidding on calls. Where's my calls at now? Ooh. How about that? Thank you very much. Up 20% in calls already. Nice. All right. From there, let's jump over to there is copper. Copper's kind of stuck. It's an outside range for the day. It's in a daily buy still. And the weekly is trying. You can see the fast algo is lifting, but the slow has dragged its feet. They're not really doing that well for silver taking off. Then we take a look at platinum this morning. Platinum's been a disappointment. They're trying to tell us that this metals market rally, gold and so forth, may not be real. Look at that. Matter of fact, it's trying to fall. It's trying to get into the weekly buy, and it's having a real hard time. Look at that right there. It's really battling hard. It'll make it maybe if it stays here, But look at this. It's a big wide range today, and it's barely playing the upside. I wonder if gold is even up for the day now. Gold is just barely. Yesterday, gold closed. I have it at 96. Is that right? So gold closed yesterday at 96. And it's trading now at 98. It's up $3. That's it. So the silver, they're playing catch up with the silver. That's what it comes down to. Lack of liquidity, lot of leverage, and value of government debts put them down. Yes, indeed, they do. I agree with you. So from there, where else can we go? Stock market's going to jump. Let's put the stock market up there. See what they do. Look at it. So it's through the 60s now. Right there. And we are open here in the States. They just opened up. And it's kind of stumbling around, selling off a little bit. Let's see if they put a push into it. But obviously, they're off the lows for the moment. Not anymore, though. Look at that. We've already gone into a little sell here. Let's see what this does. Went into the sell right there. Let's see if they put the buy in there. It's trying. There's the buy right there. That one closed in a buy. There they go. They're pushing them a little bit more. Come on, push them up. Go, go, go. Doc's got calls. All right, traders. Everybody have a safe and smart weekend. We will catch you all on Monday. TGIM. Thank goodness it'll be Monday. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. See you on Monday, traders. This is Doc saying have a safe and a smart weekend. Over and out. Thank you.